Hey traders, John Howell here. We're going to be looking at the just the technical analysis of the markets right now, and a lot of people have been saying that the market's overvalued, the market's going to crash, and it's not what you think. It's actually it's actually not what you think when it comes to these markets. And I'm going to give you some simple tools to follow along when actually trading and looking at these markets of what's happening right now. Also, we're looking at the mining stocks, guys. Also some. Also the silver and gold stocks, just looking on the short-term technical basis here, guys. And then also what I'll do is I want to share with you just one simple thing you can start to do when you're trading the markets to give you a much better chance of you surviving these markets. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so as you know, trading is a hard thing, right? Like trading, it's so much more that goes into trading. If you've been trading for a while, you know that, and that's the reason why I've designed this free trading course that I'm giving away for free. It's the 4 phases. There's the phase 1, what goes into a good trader. Phase number 2 and 3, chart reading in my trading system, and phase number 4 is all about what the X factor. What is the differences from traders who do well, traders who don't do well, the mindset sort of thing as well too. So, guys, first thing in the description, or go to johnsfreegift.com. If you're struggling in your trading right now or you need some help, then I guarantee at least phase number 1 will set you straight. If you're losing a lot of money, phase number 1 is definitely going to set you straight on what mistakes you're making right now and what you actually need to do to move forward. Again, it's free, guys, so go get access to that right now. So let's have a look at the stock market right now. And we can see that just by looking at this, if I bring this up with just, let me actually bring up just a blank chart here for a minute. I'm going to bring up the next short term. You can actually see what has actually been happening with the Dow Jones. So the Dow Jones, we can see we've had a very sort of a, let me just bring this up through to here. Let me bring up the good old line. Okay, so you can see how that we definitely did have a bit of a long-term support level through there. Now we're really starting to build a lot of momentum through there, as you can see. So if I bring up my trend line, you can see how, let me do that through there. You can see how we're definitely starting to make a lot of just a really good support level coming up through there. You can also see that we definitely did have like a bit of a sideways phase, and now we're breaking out. This is actually very bullish sign through here, guys. So we can see that we've had a sort of a nice breakout through here, and now we're continuing to run up. So where's this market likely to run to when it comes to the Dow Jones? Well, there's this thing called a 1-to-1 projection. And let me actually bring up the Fibonacci tool. So this is a Fibonacci projection tool. What you do is you measure from the low point to the high point here. So that's that high point through there. And then you want to bring this next point, this next point down here, and you want to bring that up to where the low was. Okay, so it's like there's the run up. Then we have the pullback of the pullback here. That's the low. And then what we have is we have like what we call a 1-to-1 projection. So that tells me on this pullback, the Dow Jones target for this 1-to-1, it's called a 1-to-1 because this movement up is the 1. And then what you do is you project that from there to there, and you project that up, and that's a 1-to-1 movement. So this here is the same movement as there. It's called a 1-to-1 projection, and you can use this. This definitely really works really well in the markets when we get a nice healthy pullback, not too much of a pullback. Now, what I mean by not too much of a pullback, you can notice back here in the stock market how we had this low point and then we had a very big deep pullback. Well, that's when you can't really use the 1-to-1 there, because we're not really getting a good strong sort of higher low in the markets. But if I go back in time to give you an example of a good strong healthy pullback, look at this here. So I call a good strong healthy pullback probably a 50% or less retracement. So if you can see this move through here, notice how we had this very strong move up through here, and then we had a pullback. So if I go from the low of the, I'm going to use the Fibonacci retracement tool now to see whether we have a strong pullback, because the 1-to-1 projection works very well if we do get a 50% or less retracement. So you can see we had a very strong move up, a very weak pullback, and now we had this move up through here. So notice how we actually pulled back. We actually had 50% retracement or less. When that happens, it's actually a very, very, very strong move. So what I'm going to do right now is I'm going to take that off the screen, and I'm going to use what we call the projection. So I'm going to use a one-to-one projection. We're going to go from the low to the high point, and then what we're going to do is we're going to go from there, and we're going to bring that up to there. And so, as I said before, the one-to-one projection, and if I bring this up through here, that tells me, based on this move up, it's a Fibonacci, it's a 50% or less retracement, and then we've continued up and we've actually broke this high. So once we do that, there's a massive probability, or there's a real high, I reckon at least a 70% probability, maybe higher, that we're likely to get to where? To that, remember I said before, the projection line through there. So again, what we're looking for is we're looking for a market to give us a 50% or less retracement first. And then on the breakout, once we do that and we start to break above here, there's a real high probability we're likely to run towards this one-to-one retracement. And as you can see, it actually took some time. It didn't get there straight away, but as you can see, it ran up there. But look what happened. It ran straight to there, the one-to-one, and then it failed based off this Fibonacci retracement. Make sense? So that's what we're looking at through there. It's just a simple tool, guys, to help us. Like, remember, if the market has a more than, say, a 60% retracement, it's not in a strong upward trend. Just like we had back here, we're not in a strong. We weren't. This here wasn't a strong upward trend back here. So you can't really use that as a gauge or as a guide, should I say. You definitely had we had this sort of low point through here. We had a high. There wasn't no one in control, right? So we had a lower high, and then we had sort of a lower low. Then we had a higher high. Now we had a higher low. So you can see here, we're not in a upward trend, we're on a downward trend. But look what's happening right now. After stuck in this sideways range, we actually ran up, hit the resistance, came back down, went sideways, and now we had a very nice breakout bar breaking above this resistance point with this little pullback. So once again, that tells me now the Dow Jones has a very high probability of running towards the 36,000. In fact, guys, I have a target of the 40,000, which is up here. I have a target of 40,000 on the Dow coming there soon. But on a short term, guys, on a absolute short term basis, that's where I see this here. So the market and the charts right now are telling us nothing but bullish signs. And until the market changes, then we cannot be going against it. So any of those bumblebees right there right now, people calling the markets at the top and they're fearful and the lockdowns and so on and so forth, it's actually not what we think when it comes to the Dow Jones. If we have a look at the S&P 500, something really similar here. You're still getting this very nice pullback. We're just getting a very sort of tight, like a very, very tight sort of upward channel through here, as you can see. So just a very, very, very tight upward channel. I wouldn't be too surprised to see this thing break up. And I have, once again, guys, I have at least a 5,000 target, by the end of this year. Not only is the technical analysis on this here showing a lot of higher low, but the fundamentals behind this market has been quite strong. So very nice sort of run up, sort of flag through there. Once again, guys, I wouldn't be too surprised to see this thing break up through there and continue to run in that upward in the upward direction from there. And but on the Nasdaq hasn't really been doing much. We can see we've just been sort of just hovering around this sort of 14,900 level, just hovering around there. We're not really doing much through here, so a bit of a sideways range. But once again, guys, this is now sideways. We're not really doing much. I wouldn't be too surprised if we saw a nice little break up and then to see the Nasdaq run. Once again, I have a target of 17,000 by the end of this year. So I have a lot higher prices when it comes to the Nasdaq and also the market itself too as well too. But we're definitely getting like a bit of a squeezing pattern as well too. What I mean by that, definitely a squeezing pattern. You can see how we definitely had this low point, And now you can see how, notice how we're squeezing up into this triangle pattern. So we're squeezing up into this level. We're definitely likely to break out. Once we do start to break out, which I believe is going to be to the upside, then we're probably likely to see a very, very nice move from there. So if it is to the downside, then we're probably going to have a nice movement back down to around the 14,000, maybe around that sort of, 14,200 to this longer term level of support that we've got through there. So that's what's happening right now, guys. We don't know. We definitely don't know where it's going to break, because these triangle patterns, there's no guarantees of it breaking up or breaking down. We just need to see where's the breakout of this triangle. Does it break out to the upside, or does it break out to the downside? So we just need to keep an eye out for that. Moving over now through to the good old gold market, and it's interesting to see what's happened with gold. Are we about to see is this the final low in gold? Because we definitely got to be a bit of a flash crash here, right? A bit of a nice big flash crash moving on the downside. It's going to be really interesting to see how gold sort of holds up here. We are definitely on a short-term basis. We are definitely at this level of there's a lot of support through here. And there's a lot of resistance all through here. So we're definitely at that level. We definitely came down towards this support level and hold here. But the last time we had a big flash crash like this, gold actually created a V bottom and then made a big move. And that was actually back right here. Right, so remember, but this is back in the middle of last year, in March last year. You can see we had a bit of a flash crash, and then that was the slingshot pattern to see the movement up. So it's going to be interesting to see whether we do start to see a bit of a V bottom out of this. We're going to have to wait and see what the market does. But if we do start, is it going to be a V bottom, or is it going to be a continuation? We can see, obviously, we need a bit more data. But if we do start to see something like this coming out of it, then that's going to be a V bottom. So we need to keep an eye out for that. If it doesn't do that, and we do something like this, and then we drop down, and we create like a little bar like that coming down, then we have a really good probability of then having just a lot more downside to come out of gold. But this could be, it could be a bit of an end. This could be a warning sign that, you know what? This flash crash actually might be that last movement on this overall big picture, nothing going on, just to freak people out. Because as you know, the market loves to do that, just like it did back here. As you can see, right back here, it flushed down and then we made a big move. I'm not saying it's definitely going to be that, but we need to see. But if we do start to see something like that out of gold, then there's probably a really good probability we're likely to start to see something like that coming in gold. So let's actually see whether that is this going to be a V bottom or what? Moving over now through to silver. And once again, guys, the same thing for silver, but silver hasn't really had, the last time silver had a massive, like a very, very, very fast flash crash was back here at the start of 2020, around February and March. I actually bought silver right here, bought some more silver here and rode it up and done really well. But as you can see, we had this sideways phase and then we dropped it down and then we held it through there. And as you can see, then once we actually dropped it down through there, the question now right here is, do we get something like this here? We got the movement down, but do we then start to create this movement up? Because we've got this, as you can see, that we got this sharp move down. What we're looking for to say, okay, this is V bottom action. There'll be a few things here that I want to see to start to see some really good bullishness out of this. And that'll be, firstly, do we actually start to like create like this movement up to create the V bottom? Or do we actually start to see, we have this movement on the downside. We definitely have this movement on the downside when it comes to silver. Like that'll be the trend line I use somewhere through there. So I'd use that. So we would want to see silver for the V bottom to be effective. First thing would be is definitely a move back up, but we want to see the movement in silver to be something like this. So it moves up, and then you want to see something like that. Because if we can get something like that, then now we're looking for that higher low and then a movement to the upside. So let's see if we actually do, because we may not get that, but if we do start to get the V bottom, we've got a lot more upside to come. But if we just hold here and then start to drop back down, then we're probably going to go through another bit of a selling movement on silver there. So, but we are still in a very big downward trend here, guys. So we need to see whether this is the starting of a V bottom or not. Moving over now through to the GDXJ, and the very interesting thing about the GDXJ is you can see the GDXJ had a lot of support around the sort of the $43 level, as you can see, $43 level, a lot of support through there, a head up, and then we had a bit of a flush down, but now we're just holding here. So my little thing about these markets is like, is this what I call like an end of trend indicator? We have to wait and see. But a lot of the times you see the market, how it has a lot of support here for a bit, and then it breaks down, and then it starts to make its way back up. And this breakout here is what I call a slingshot or end of trend, meaning the trend's coming down, and then we start to do that. So is that going to be that, or are we just going to continue this downward trend through here? We have to. There's no real probability here yet, so we could be just continuing this downward trend through here, but we definitely had as you can see, we definitely had a lot of support through there. We flushed back down. Is that the end of the trend where we're going to see some upward movement? Because I know a lot of people are getting freaked out about the mining sector. Same for the GDXJ as well too. We definitely had a lot of support around this sort of $33 level. We definitely had a lot of sort of sideways range, and we broke out. We broke to the downside, again, we're just sort of just hovering around here. So it's going to be really interesting to see whether we do start to get some upside movement as well too. Moving over now through to the silver mining stocks, the SILJ silver miner junior stocks, and you can see how we've created like a bit of a double bottom through here. So very interesting pattern to see. We definitely had a bit of a triangle pattern forming through here, and this is exactly what this looks very, very similar to Bitcoin and Ethereum before, because we're actually developing a triangle pattern. But just because it's a triangle pattern doesn't mean it's going to break out to the upside or break out to the downside. We don't know wherever it's going to break out of this triangle. We don't know where, but we're definitely going to get a breakout or an up or break out to the downside. But we're definitely squeezing up into this triangle pattern. Now, if we do break to the upside, this is exactly what Ethereum did, and also Bitcoin as well too. It's just a pattern. We definitely have this here would be the neckline for this double bottom on silver. So if we do start to break above this 14.50, if we start to see a $15 print, then we could start to see the SILJ start to make its move back up to, I would say, around the $16 print. So if we could start to see a break above this 14.75, then we could probably make our way back up to $16 through there. Moving over now through to the SIL, and the SIL pretty much the same sort of thing, bit of a slight break below this level, and now we actually move back up. You can see how once again that we definitely are in a bit of a triangle pattern. This is probably the triangle pattern through there, but we're definitely in a bit of a double bottom. I would say more of a double bottom than the triangle pattern, but this is the resistance level. If we do hold and we start to break above the 43, then that could see a move to the upside. Now, guys, I'm not saying that this is going to happen because we are on a downside. This could actually hold and then continue dropping back down. And if we cannot hold this level, then on the downside, the next major support level is going to be around that $32 level. That's the next support level. So if we cannot hold here and we break back down below 39, then we're on our way down. But if we do hold here, bit of a double bottom, and we start to get a break above this $43 level, then that could see us having a move back to the upside when it comes to that $47 level there. So it's going to be really interesting. We are in a downward trend right now, so the trend is your friend until the end. But it's just a pattern we need to keep an eye out for. Same for the SIL. This actually doesn't mean anything as well too. We could just be getting ready to squeeze up through here, and then get another movement on the downside, something like that, and then we're probably likely to see something like that. But we need to see where it's going to break out for. But this is just trading. Sometimes is trying to just keep an eye on the different patterns forming, and so you can look at it, be present with it, like this double bottom. If this double bottom is a double bottom, and we start to do this, right, we start to get a breakout, then we know what's going on and we can keep an eye out for. And also we can see the other side of things as well too, is that if we do hold here and we start to break down, then that also means that we're probably likely to get some movement on the downside. So I hope this helps you out today, guys, and I'll see you in the next video.